It's that time of the year again. It's tax time. It is great for some, not so great for others. Let me start off by saying that the only time that you should pay for taxes with your credit card is that if you could pay for it in cash right now, and if you're trying to meet a minimum spending requirement. Interest rates on credit cards are ridiculous. I never mentioned them on any credit card reviews since they shouldn't have an effect on you since you're paying your cards in full every single month. So if you owe taxes, paying with your credit card is rarely a good idea. But let me tell you why. The first reason why you may not want to pay taxes with your credit card is that most third-party payment processors, they charge anywhere from 1.87% to 2% service charges. If you use major tax preparation software like TurboTax, the fees can be much higher. TurboTax, they charge you a 2.49% fee. So when paying for taxes with your credit card, most credit card companies will label this as an other expense. Most credit cards will only give you a 1% cash back on this type of transaction. The Citi Double Cashback card, which offers 2% cash back, would probably be the best card to use in these type of situations since you would break even on the fee and the cash back that you get from the card. Another option to pay your taxes off is using Plastique, or plastic, which is a bill paying service that allows you to pay your bills, including your taxes, with your credit cards. The fee with this service is 2.5%, but I'll tell you why you may want to consider the service, even though the service fee is higher a little bit later in this video. It is possible to claim the service fee as a deductible for your taxes next year. As a disclaimer, I'm not a tax professional, so you definitely should consult with one when it comes to maximizing your tax liability. To claim fees on your own personal tax return may be difficult since there used to be a miscellaneous deduction that allows you to deduct things that exceed 2% of your income, but that no longer applies. But when it comes down to business taxes, that's a little bit different. The service fee that you pay for using your credit card on business taxes is considered a business expense and it is 100% tax deductible. The only real reason that you should pay for taxes with your credit card is to meet a minimum spending requirement that you need to get the sign-on bonus. Because it's becoming more and more difficult to churn, so many people are willing to pay a small fee just to get a bigger return on their money. But you should always run your own math. Having a spending requirement of $3,000 but having your tax bill at $9,000, probably that won't be in your favor. $9,000 at 2% is $180. So you would have had a credit card that would give you $500 back, but in reality, this will only give you $320. So initially you would have a 16% return, but now you only get a 10%. Still, that's not too bad of a ROI, but you definitely could have done better. Typically, you want to do this if the minimum spending requirement is higher than $3,000, because most of the time, those type of credit cards will give you a higher sign-up bonus. But if you're considering to do it with a credit card that has a minimum spending requirement of $1,000 and they only give you back $200 cash back, it is basically pointless just to get a $13 return. But in the end, it's really up to you if that $13 is worth it or not. The good thing is that the IRS will allow you to split up your payments. But it does depend on the sort of tax that you're paying. So for the majority of us, we'll be using the tax form 1040, and this will allow you to make up to 2 payments a year. So for example, if you have a tax bill that is $10,000 and your current credit card requires a minimum spending requirement of $5,000, this can be an option for you to make the first tax payment of $5,000 on that credit card. Then 6 months later, you may be thinking about opening up a new credit card that has a similar spending limit of $5,000. Then you can make that payment to collect another sign-on bonus for a different credit card. So in this situation, it may make sense for you to pay your tax bill with your credit card, so you can meet that minimum spending requirement. Another option that you may want to use is to pay your tax bill with Plastique. Unlike what I said earlier, depending on the taxes that you owe, you can only make 2 payments a year. But since Plastique is a payment service, they can pay your tax bill in the form of a mail check. So when you pay your taxes with a check, there are no limits given by the IRS of how many checks that you can send. So if you were going to go with this route and say that you're applying for a credit card like the Bank of America Cash Rewards, where they give you $200 cash back after spending $1,000, you could just send a check just for $1,000 so you could just meet that minimum spend requirement. So when you're using the service, they will charge you a fee of 2.5%. So for a $1,000 check, that'll be $25. Since you will meet the minimum spend requirement, you will get $200 cash back. So effectively, you would get a sign-up bonus of $175, which is an ROI of 17.5%. Still, that's a pretty good return. So after you meet the minimum spend requirements that you need for that credit card, you can transition to make your IRS tax payments with your bank account. When you make a tax payment with your bank account or direct pay, there is no service fee. But again, you really should consult with a tax professional to see whether or not you can make payments with your bank account and also with Plastique or other bill paying services at the same time or not. Because if you're able to continue to make your payments with your bank account, this will save you a lot on fees. When you decide to open up a credit card and you need to meet a minimum spend requirement, you can just make whatever payment that you need to make with that credit card using Plastique to get that sign-on bonus. Then you can just resume your regular payments with your bank account. My honest opinion is that if you're thinking about paying your taxes with a credit card, it's typically not worth the effort that is involved to do so. The only reason why you would really want to pay your taxes with a credit card is just to meet that minimum spend requirement and if you're okay with paying the fees that are involved with it. So even if you had a credit card that gives you 2% cash back, you really don't net that much profit unless you got a gigantic tax bill. Paying for your tax bill with credit cards, billing services, and also your bank account can get a little messy when you're switching back and forth with different service providers. So it's really up to you to figure out what's best for you and what you can handle. Alright guys, so that does it for me. Again, my name is Naam. If you guys want to learn more about personal finance and credit cards, come hang out with me some more over here.